We had forecast yesterday suggest that panic selling might take the market lower despite bargain hunters possibly coming to the fore. Certainly that what played out in yesterday's session. What are you making of the market movement we're seeing at the moment?
Yes, to some extent we are seeing some sell-offs in certain sectors. I think what's key to notice, it's more like a sector rotation. And investors are moving out of sectors with very high valuations right now and into sectors that hadn't previously moved. And two sectors of such are the petroleum marketing sector and the insurance sectors. We hadn't seen much movement in those sectors year to date, but they are beginning to get a lot of attention from investors right now.
Well, there's some concern out there, as I was saying earlier, that the market may well be overbought at these levels. Do you share that sentiment, or are we putting these moves lower down to mere profit taking at this stage, where trade has been pretty volatile?
It will be key to look at it on a sector-by-sector basis. Overall, the market is currently trading at a P of about 18.74 times. But if you look at different sectors, Ps are slightly lower or much lower in some sectors, even though a sector like FMCG, which is trading at 13.38 PE times, looks like it's overbought. Key companies in that sector are yet to bring out their full year results. We believe that when those results are released, we will see earnings gradually catch up with current valuations. Investors will take a look at the earnings, take a look at the new Ps, look at forward earnings, look at forward Ps, and probably start to buy into those sectors once again. But until we see those results come out, we wouldn't be able to say that the FMCG sector, for instance, is overbought. And you have pockets of opportunity like that within the market.
Why is the market then still seeming to be so nervous? I mean, when we talk to our brokers on a daily basis, we're hearing all this positivity come out of Nigeria in terms of growth prospects moving forward, in terms of reforms in the oil and gas space, in the banking arena as well, political reforms that are currently in place. There's a lot of positivity. So what's triggering all the jitter? Because there must be some cloud hanging about here that warrants all the volatility we are seeing in the markets right now.
All the positivity you mentioned is basically what has brought the market to its 30.76 year-to-date performance. But at a point, we believe investors will have to stand and take stock and say, okay, where is actual value? Let's not just start buying companies that do not have earnings across the board. And it's that process that is currently being undertaken. After looking at the sectors, like I said, and looking at companies within those sectors, you would understand that certain companies still have fundamentals for which their true values or their true potentials haven't been reached just yet. And it is those kind of companies that will continue to see investor interest. So yes, there's some nervousness, but there are still certain companies that still have the fundamental basis to warrant higher valuations.
So let's get specific and put you on the spot. Kemi, what ranks as a top pick as a stock for you in your books at the moment? And let's look at the fundamental support that it enjoys.
Okay, I think first I would go to the FMCG sector and talk about Dangote Flour. Even though it's seen a strong rally over the past few weeks, the company recently came out with a potential forecast earnings for 2009, and they have come in higher than analysts actually expect. And where that company is able to deliver on such earnings, then it would warrant a higher valuation that it's currently trading at. It's currently trading at a PE of about 10-11 times, and relative to a market PE of 18 times, sector PE of 13 times, we believe that is an opportunity that still presents itself. We also think that going into 2010, it still has the potential to grow its earnings further. If you look at the cement sector, we have WAPCO, we also have Ashaka. Ashaka is an interesting case because they recently made a switch in their energy supply base from LPFO to coal, and they also have a coal site of very close proximity to their plant. So that has helped reduce their energy cost profile and improve profit margins. So we also expect those kind of companies to come with stronger earnings.
Well, on the flip side of that, what is one stock that you would be staying clear from at the moment? And the assumption is that it would be in the banking space. Is that necessarily true?
I would prefer to look at it on a broader base. For the banks, we've seen 3 key results come out, and the expectations of what the rest will be very key before we could take any decision on which sectors or not to, or which companies or banks or not to sit in. The ones that have come out so far, we've seen how they've done. The mid-tier banks are of particular interest right now because we haven't seen any releases from their end. The Accesses, FCMBs, Stanbic IBTCs, Skybank specifically, we're looking to see how their earnings will come in.
Well, for the banks, speculation is that we should start to see some good news with regards to the AMC bill next week. To what extent is the market really pricing that in, or is it more of a case of we've got to wait and see it to believe it?
I think news, when the AMC passed the House reading and the third Senate reading, that was when the market sort of took that into consideration. Right now, we have to see the bill passed first. The market has probably already taken into consideration any positivities from the passage of the AMC bill.